Hello and welcome back to the 2024 Real Estate Market Snapshot for the month of August. Welcome everybody. I cannot believe it's been another month since we saw you last. As we have been doing now for the last several years, we've got our QR code. I don't have a slide for this, however, I do want to announce early that we have partnered up with RIVCO, it's Riverside County Economic Government and Development guys. We're going to be doing another event this year in the city of Riverside. I believe we're going to be at the Riverside Convention Center sometime the first week of December. Between Thanksgiving and Christmas, that might create some challenges, but we're going to do it. So stay tuned for another forecast that we've got coming up here before the end of the year. So let's jump right in with our Inland Southern California update. As always, we start with median price. Median price across the four counties is basically stable. A little bit down, a little bit flat, a little bit up, but for the most part, very, very stable pricing for the month of July. It's what we would expect. We have nice single-digit positive numbers. Orange County up 8%. Los Angeles County 7.4. Riverside County 6.7, San Bernardino County bringing in the rear at 5.7%, but they're all positive numbers. Those are year-over-year appreciation numbers. That's healthy. I like those. These 12, 14, 18, 22% appreciation rates are difficult. So prices are stable. For the month of July, hey, year over year, they're all positive. It's the 15-year median chart. So if you guys want to click into this, you can take a look at all four counties and go back for 15 years and see where they are and what they looked like. Supply and demand side for the four counties, we're going to start with new listings. These are brand new listings that came onto the market in the month of July, as opposed to all total listing inventory that's been on the market. Maybe it came on in January, February, or March. But the July listings tick down. That's 2 months in a row. We saw the new listings come down a little bit. It's not unusual. But having said that, it's better than it was a year ago. Positive 3%, positive 11, positive 5, positive 5.8, positive 5. What those numbers are year over year. July 2024 listings compared to July 2023 listings. So even though I'm like, oh, I really, really would love some more listings on the marketplace, we're better off than we were last July. So here's our 5-year chart for new listings in the four counties. These are the numbers. You can take a peek at those if you like. And here is the 15-year chart for that. So if you really want to go nuts with it, you can take a look at the 15-year chart of new listings for the four counties. Pending sales, here I am again. So now it's for the third month in a row. All four counties pending sales are down. That is rough, okay? I got the chart here. The other one's going to give us a little bit larger one. So year over year, July of this year, July 12 months ago, 32% negative in Orange County, 23.8% down in Los Angeles County, Riverside County, 10% down, San Bernardino County, 18% down. So this is that pain point if you're in my business, and we rely on, let's sell some houses, let's open some escrows, let's do some loans. So this is one of the pain points you guys have heard me been talking about for a long time. So even though the pendings are down, they're really down. And what does really down mean? We're talking record low sales. Record. So if you've been watching the news and watching national numbers, the pending sales are basically as low as they've ever been, okay? Right now, I don't have a chart on this, but just trust me, National Association of Realtors is forecasting for the country 3.9 million sales. These are single-family existing home sales, not new construction. That number would be the lowest number that I believe since they've ever tracked it, certainly in the last 37 years that I've been doing the business. So again, is the market fine? Yeah, the market's fine, but if you're in my business and you want to sell some houses, this is the biggest pain point we have. Prices are stable, listings are kind of sort of stable, but frankly, we just don't have enough transactions to kind of make this, put a smile on my face. Let's put it that way. So our spotlight city for this month is Palm Desert. I think I told you several months ago, I've been spending a lot more time down in the low desert doing property management for the most part. But man, this is an interesting market. I think I did this one like a year ago, but I just randomly pulled it up. This is average sales price. Again, Palm Desert. Now again, sample size is smaller, city is smaller. So it's not necessarily fair to look at all of this choppiness, but man, you look at this choppiness from a year and a half, 2 years ago, that was a median sales price, or excuse me, an average sales price of about 1.35 million. Take a look at that price today, $836,000. Okay, this is where you've got people talking to markets that are getting nervous, and they sit back and say, "Oh my gosh, look at that! Are we in for some sort of a correction?" I would say no, but if you just looked at Palm Desert and you looked at this and you looked at that, you say, "Ooh, that looks like a correction to me." So it's very, very interesting to see, but you got to be careful when you're looking at small sample sizes. And again, these are relatively small sample sizes, but average price in the city of Palm Desert right now, $836,000. If you want the more expansive chart, go back and click on that one I showed you earlier. This is active listings. I highlighted this because, boy, this really brought me home to my roots when I started selling real estate as a kid. And I was out in the Cerritos, Long Beach area to begin with, and then I came out to the Riverside market in the Inland Empire, Moreno Valley specifically. By the way, if you live in Palm Desert, no, I'm not comparing Palm Desert to Moreno Valley, but man, this chart sure does make me feel like when I was looking at these charts 25 years ago. These are the listings today. There's about call it about 220 listings in the entire city of Palm Desert today. You go back to February of 2016, 1,333. That was not unusual 20 years ago in any given market. We just had 5, 6, 8, 10 times more listings on the market than we do today. And boy, Palm Desert really brought that back. So boy, that's really illustrative of what's going on across the board. But anyway, there you go, Palm Desert. So you got about 250 listings. And then on the pending side, very, very choppy. Again, small sample size. There's only 74 houses sold in the entire city of Palm Desert last month. Is that a big number? Well, no, it's not. But I guess if you want to go back to this peak, that looks like about 170 houses. And this peak here corresponds to that high price that we saw in Palm Desert, that $1.2, $1.3 million. So if you're interested in the Palm Desert market, go back, take a look at these charts. They're all there for you. Interest rates, man, oh man, has it ever been a week? By the way, today is August 6th. If you've been watching this guy last week and this week, whoa, I could do 2 hours just on what's going on at the Fed and what's going on in interest rates. The stock market had a little meltdown yesterday. Recovered today, whatever it happens to be, it'll go down tomorrow, up the next day. But what's going on with rates? I gotta tell you, bad news can be good news. Most people looked at what happened yesterday in the stock market and said, oh my gosh, it's a crash, the world's ending. Well, it wasn't and it isn't today, maybe tomorrow, who knows. But that sort of stuff helps the bond market, which helps the mortgage rates. And we basically have seen dramatic improvements in the 10-year bond. It's a very small number here, but it's 3.8. Anything below 4 right now is nice. We can talk about yields and spreads and all the rest of that. That's too much for this particular snapshot. But the bottom line, we're back below 4% on the 10-year bond. What does that do to the 30-year fixed mortgage, which is what most of you guys watching this may be interested in? That brings it down. Yesterday, if I had done this, it was 6.4. This is the average of indices. It's going to be a little more, a little bit less. By the way, can you get a mortgage today that starts with a 5% number, like 5.75? Yeah, you can, depending upon rate, down payment, or credit and down payment, and a whole bunch of other things. But this is significantly better than what we've seen before. Nobody knows. My crystal ball broke a long time ago. However, it feels again like we're going to start to see a little bit of easing up on mortgage rates, which should help you if you're on the buy side of the fence and you're interested in, again, we've seen almost a point correction just in the last few months. So again, this is Mortgage News Daily. You can click here, or you guys can download that. It's a free app. Put it on your phone if you're buying a house and you want to know what's going on. This is from Optimal Blue. I like this one because I've got the graphic here. This is April, and we had some rates over 7.5%. Okay? April, May, June, July, 4 months. So 4 months ago, we've chopped a whole point. That's significant depending upon the price point you're looking at. So I feel a little bit better on where we may end up the year. I'm not going to make a prediction here, but there are other people making predictions that we very well may see mortgage rates end December of this year somewhere with maybe the number 5, basically sub 6%. We'll see. By the way, if you're paying attention, if you've been following Chris Thornburg at Beacon Economics, when we did our forecast just, what was that, 2 months ago, 2.5 months ago? Chris was projecting, I don't know if he still is, but he was projecting a 7.6% average 30-year mortgage at the end of this year. Let's hope Chris is wrong. So this trend seems to indicate maybe it's going to be a little bit better. So we shall see. Feds are talking about doing some Fed funds rate cuts, 1, 2, who knows, we'll see. But we've had this conversation before. Bottom line, interest rates are dramatically improved. So if you haven't been paying attention, and I'm your source of truth when it comes to this, well, they've gotten a lot better. So if you've missed a month or so of snapshots and you still thought rates were above 7, they're not. They're definitely much improved. I have no idea what's going on with Google, but something is going on with Google, because for the last 2 months, I try to just search mortgage rates because I think that's where most of you guys go. And their link is broken. I don't know. It used to be 1 day behind, 2 days behind. It's now 2 weeks behind. I didn't even run. I tried to run it for this time, but it gave me a number that was 2 weeks old, so I said, forget it. So if Google doesn't straighten this out, I'm just going to get rid of it, which, by the way, probably the single worst place to go to check mortgage rates is just go to Google and check mortgage rates. Call me, go get the Mortgage News Daily app, go get the Optimal, which, by the way, the other two I showed you, they're free. You guys can go get theirs. There's nothing proprietary about that. So at any rate, rates have improved. It's a wonderful thing. So this is the deal. I want to thank you for watching our 2024 August market snapshot, but special shout out to Little Fella and Dig. Those are my grandkids. That's Abraham and Kennedy. They are big fans and subscribers to the Lance Martin Presents YouTube channel through Coldwell Banker. So I would love for you to subscribe to our channel, just like Little Fella and Dig. So at any rate, have a great August, and we will see you next month.